Welcome back to Talk Tickers. We're going to be taking a deep dive into Upstart's Q4 2024 performance. Their earnings call just wrapped up on February 11th, 2025. And well, they've got some pretty exciting stuff to share.
Oh, yeah. I was really interested to see how they're doing, with this whole crazy economic climate we've been seeing.
Right.
And, their AI lending model has been making some big waves. So I was curious to see, how it's all holding up.
Well, they've definitely bounced back in a big way. Remember the beginning of 2024? It's pretty rough for them. But they've seen an 86% increase in originations since their lowest point back in Q1. And fee revenue jumped 44%.
Wow, that's a pretty impressive rebound, especially given the economic headwinds. It really says something about how adaptable their model is.
Absolutely. And Q4 was no different. They saw 33% sequential growth in origination volume, and revenue jumped 35%.
Yeah, those percentages are pretty impressive on their own. But when you translate them to year-over-year figures, it really kind of hits home. We're talking about a 68% surge in originations and 56% revenue growth. That's a pretty powerful statement.
Definitely. And it's not just about growth. What I found really interesting is that it's not limited to just one specific area. We're seeing it across all their product categories, personal loans, auto loans, HLOCs, you name it. Even their small dollar relief loans saw a massive 150% quarter-over-quarter growth.
Wow, that's really something. It shows that their model is really versatile. It can be applied effectively across all these different lending markets. But what really caught my eye was their profitability. They hit positive adjusted EBITDA for the second quarter in a row. Not only that, but they're reaching levels we haven't seen since Q1 of 2022. And they were really, really close to GAAP profitability.
That's huge. It shows that they're not just focused on growth at all costs. They're building a sustainable and profitable business. So how are they doing this? What's the secret sauce?
Well, I think it all comes down to their AI-driven model. They're constantly tweaking it and refining it to make it even better at assessing risk and pricing loans accurately. This all translates into, more approvals for borrowers, lower interest rates, and of course, better returns for the lenders. It's a win-win-win situation.
Yeah, let's break down some of these model improvements because they sound pretty complex. They talked about using APR as a model input. And this new feature called the payment transition model, or PTM. Can you help us understand what all that means?
Sure. Imagine you're trying to predict how someone's going to handle a loan. Traditionally, lenders might just look at whether a borrower ended up defaulting or not. But Upstart's taking a much more nuanced approach. Using APR as an input helps the model see how sensitive a borrower might be to, changes in interest rates, like do they still make their payments on time if the rate goes up a bit. This gives them a much more detailed picture of the risk.
So it's not just about the final outcome of the loan. It's about understanding the borrower's behavior over the life of the loan.
Exactly. And that's where the PTM comes in. It analyzes all those in-between states of delinquency. Think of it this way. Sometimes people might miss a payment or two, but then catch up. Traditional models might just flag that as a delinquency and penalize the borrower. But the PTM can see that the loan recovered and factor that into the risk assessment.
Oh, so they're able to see beyond just black and white delinquent or not delinquent and look at the shades of gray in between.
Precisely. And this all leads to a much more accurate and fairer assessment of a borrower's creditworthiness. What's even more impressive is that they've actually back-tested these new tools.
Back-testing? What did they find?
Well, they simulated what would have happened if they had these tools. During the craziness of the COVID stimulus withdrawal, remember how unpredictable things were back then?
Oh, yeah, it was a wild ride.
Well, their analysis showed that these new macro handling tools could have significantly reduced their losses. They estimated a 55% reduction in excess defaults, and their models would have recalibrated a whole year faster. That's the power of incorporating all these nuanced data points.
That's incredible. Yeah. It really highlights how their AI can adapt to changing market conditions and potentially even mitigate losses.
Exactly. And it's not just theory. They're actually putting these tools into practice right now, which could make a big difference in navigating any future economic uncertainties.
It's clear that Upstart is really pushing the boundaries of what's possible with AI and lending. But it's not just about personal loans for them, right? They've been making some serious moves in other areas too.
Oh, yeah, for sure. Their expansion into auto loans and HLOCs is really taking off. Both saw a 60% sequential growth in originations during Q4.
60%. That's huge. What's driving that growth?
Well, on the auto side, they rolled out some updated underwriting models. For both auto refinance and auto retail products, this led to a pretty remarkable improvement in conversion rates for auto refinance throughout 2024, like a 7x improvement.
Hold on, a 7x improvement? That's mind-blowing.
Yeah. It's a game changer. And they're also benefiting from the resurgence of the auto refinance market. Lower base interest rates are making it a much more attractive option for borrowers, which creates even more opportunities for Upstart in 2025.
It sounds like they're in a perfect position to capitalize on that trend. What about ELOCs? That market seems to be heating up as well.
Oh, absolutely. And Upstart is right there in the middle of it. They're now offering ELOCs in 36 states, covering 60% of the U.S. population. And they're actively working to expand into even more markets.
That's impressive. Are they seeing the same kind of success with ELOCs as with their other products?
Well, early results look really promising. They've already originated over 1,000 ELOCs, and get this, 0 defaults so far. Plus, they just signed their first ELOC agreement with a lending partner, which led to a significant 100 basis point reduction in interest rates offered on the Upstart platform. It's a great example of how their technology can benefit both borrowers and lenders.
It's amazing to see them applying their models so effectively across all these different lending categories. It really speaks to the potential of their platform. But speaking of different categories, we can't forget about their small dollar relief loan product. That saw some impressive growth too, didn't it?
Oh yeah, over 100% sequential growth in Q4.
Wow. What's driving those numbers?
Well, a big factor is a significant reduction in the cost per loan origination. This allows them to approve more borrowers while still maintaining profitability. It's a delicate balance, but it seems like they've found the sweet spot.
It sounds like they've cracked the code for making these small dollar loans both impactful and financially viable.
Exactly. And here's the really interesting part. The data they're gathering from these loans is actually being fed back into their core personal loan underwriting model.
Oh, so the more loans they make, the smarter their model gets.
Yes.
That's a pretty powerful feedback loop.
Right. By expanding the data set with this diverse range of borrowers, their model becomes even more inclusive and accurate in its risk assessments. This allows them to help even more people access credit while still mitigating risk.
It really does seem like they're living up to their mission of making credit more accessible. But all this growth requires a lot of capital, right? How are they handling the funding side of things?
Well, they're in a really strong position. Funding commitments from their partners increased significantly in 2024, which sets them up for even more growth in 2025 and beyond.
So where's all this funding coming from?
Well, in Q4 alone, they secured over $1.3 billion and increased commitments from existing partners. And they locked in a new $150 million personal loan warehouse facility.
Wow, that's a huge influx of capital. It sounds like investors are really confident in their ability to execute their vision.
Yeah.
What about traditional banks and credit unions? Are they still hesitant to work with Upstart?
Actually, we're seeing a trend of traditional lenders coming back to the Upstart platform. In Q4, originations with bank and credit union partners grew by 30% quarter over quarter, and a whopping 76% year over year.
That's a pretty clear sign that Upstart is gaining some serious traction and credibility across the entire financial industry.
So with all this momentum behind them, what are their priorities for 2025?
Well, they've laid out 4 key areas of focus. First, they're aiming to 10x their AI leadership. This means ramping up their model innovation, expanding their AI team, improving infrastructure, and streamlining processes.
Wow, 10x. That's ambitious.
It is, but they're not shying away from a challenge. They want to cement their position as the undisputed leader in AI-driven lending.
That makes sense. What's their second priority?
Preparing their funding supply for rapid growth. They're laser-focused on strengthening partnerships with investors and lenders by consistently delivering high-quality loans across all asset classes.
It sounds like they're building a really solid foundation for sustainable growth. Absolutely. Their third priority is profitability. They're targeting a return to GAAP net income profitability in the second half of the year.
So they're not just chasing growth. They want to show that they can be both high growth and profitable, which is a pretty powerful combination. What's their fourth priority?
Well, their fourth priority really resonates with me. They call it making giant leaps toward best rates, best process for all. It's all about improving the borrower experience, simplifying the lending process, and making those super competitive rates available to everyone.
That's a pretty inspiring vision. So with all this talk about AI and growth, there's a phrase that keeps popping up in their earnings call, the foundation model for credit. What does that even mean?
It's a really interesting concept that kind of captures what Upstart's all about. One of their early employees actually coined the term to describe their unique position in the market. You see, they're not just using AI to improve existing lending models, they're building the underlying infrastructure that will power the future of credit.
So it's like they're creating the operating system for lending in the age of AI.
Exactly. And they're the only ones doing this at this kind of scale. It has the potential to make credit more accessible, fair, and transparent for everyone.
That's a really powerful idea. It seems like Upstart is really trying to change the game when it comes to lending. Now, before we get too carried away, we have to remind everyone,
This is not financial advice.
absolutely. We're just here to break down the key takeaways from the earnings call and give you something to think about.
Always do your own research before making any investment decisions.
Now, for our This Is Not Financial Advice segment, I have a particularly wild but intriguing trade idea that was sparked by Upstart's performance. What if, and hear me out here, Upstart becomes the Amazon of lending?
Whoa, that's a bold prediction. Comparing them to Amazon is setting the bar pretty high, but
But think about it. Amazon started with books and then expanded into pretty much every product category imaginable. Upstart is doing the same thing with lending. They started with personal loans and are now rapidly expanding into auto loans, HELOCs, small dollar loans. Who knows what's next?
yeah, I see your point. And just like Amazon leveraged data and technology to personalize the shopping experience, Upstart is using AI to personalize the lending experience.
Exactly. Amazon's dominance disrupted traditional retail. Could Upstart's innovative approach do the same to traditional lending?
Well, they're already making waves in the industry, that's for sure.
And if they continue on this path, imagine them becoming the go-to platform for anything credit-related, just like Amazon is for retail.
It's definitely a thought-provoking comparison. And again, this is just speculation, not financial advice. But
Yeah.
it's fun to consider the possibilities.
Absolutely. Now, before we wrap up this part of our deep dive into Upstart's earnings call, there's one more thing I wanted to mention. They announced they're hosting an AI Day on May 14th, 2025 in New York City for investors and analysts.
Oh, this is a great opportunity for them to really showcase their technology and business model in more detail. It should be really interesting.
We'll definitely be keeping an eye on that event and sharing any noteworthy insights. But for now, we'll leave you with a final thought-provoking question. As AI continues to advance and kind of permeate every aspect of our lives, how do you think it will shape the future of finance?
It's a question worth pondering. The possibilities are both exciting and a little bit daunting.
And that's what makes this whole space so fascinating to follow. Thanks for joining us on this deep dive into Upstart's Q4 earnings call. Stay tuned for part 2, where we'll continue our analysis and explore some of the broader implications of AI in the financial world.
Yeah, it really is incredible to think about just how much potential AI has to transform the whole financial landscape. I mean, we're already seeing the impact everywhere.
Oh, you're absolutely right.
Yeah.
From fraud detection to investment management, AI is really changing the game.
And, as those AI models get even more sophisticated and they have access to even more data, the possibilities are just mind-boggling.
But with great power comes great responsibility, right? We need to make sure AI is being developed and used ethically, transparently, and, for the benefit of everybody.
Oh, absolutely. It's crucial that we really carefully consider potential biases and privacy concerns and how we can hold these systems accountable. The goal should be a more inclusive and equitable financial system for everyone.
That's such a critical point.
Yeah.
Now let's shift gears for a moment and talk about Upstart's competition. They're clearly leading the charge when it comes to AI-driven lending, but who else is in the running?
Well, that's an interesting question because Upstart is really carving out its own niche. While some other fintech companies are starting to use, alternative data and technology to assess creditworthiness, none of them have really gone all in on AI quite like Upstart.
So they're not just competing with traditional banks and credit unions, they're also kind of outpacing other fintech companies when it comes to AI innovation.
Exactly. And that gives them a huge advantage in terms of speed, accuracy, and efficiency.
It's like they're playing in a whole different league.
Yeah. In a way, they are. They're not just trying to make small improvements to existing lending models. They're aiming to completely revolutionize how credit is assessed and provided.
And that's what makes them so disruptive and exciting. Now let's talk about their long-term growth potential. They're already growing at an impressive pace, but how much bigger can they really get?
Well, the total addressable market for credit is absolutely enormous. I mean, think trillions of dollars in loans originated every single year.
Wow, so even if they capture a relatively small slice of that market, they could become a giant.
Precisely. And as they expand into new product categories and new geographical markets, their growth potential just keeps multiplying.
But growth isn't everything, right? They also need to show that they can scale their operations and keep those profits rolling in as they get bigger.
That's a very important point. But their business model has some built-in leverage. As their volume increases, their fixed costs become a smaller percentage of their revenue.
And their AI-driven approach helps keep those variable costs down.
You got it. They can handle more loans with a leaner team, which is a massive advantage in an industry that traditionally relies on a lot of manpower.
So they're set up for rapid growth and increasing profitability. That's a pretty killer combination.
It sure is. But we have to be realistic. There are always risks with any investment. The economy could take a sudden downturn, competition could heat up, or they might hit some unexpected roadblocks as they scale.
Those are all valid points. But from what we've seen so far, Upstart seems well prepared to navigate those challenges and continue on their upward trajectory.
I agree. They've got a strong team, a proven technology, and a gigantic market opportunity. They're definitely a company to keep on your radar.
Now let's talk about their valuation for a minute. Upstart stock has been a bit of a roller coaster over the past few years. Where do they stand now in terms of price to earnings ratio and other key metrics?
Well, their valuation is still a bit jumpy, which is to be expected for a fast-growing company. They're not consistently profitable yet on a GAAP basis, so traditional metrics like price to earnings ratio aren't that useful at this stage.
So how should investors be thinking about their valuation?
It's more about looking at their growth trajectory, their market share gains, and their long-term earnings potential. Investors are essentially placing a bet on their ability to disrupt a massive industry and become a dominant player.
So it's a classic high-risk, high-reward growth story.
Exactly. Investors who believe in Upstart's vision and their ability to execute are willing to pay a premium for the stock.
While those who are more risk-averse might prefer to wait until they see more consistent profitability before jumping in.
That's a totally valid approach. Investing is all about managing risk and reward based on your own individual situation and your goals.
Now, before we move on to our final thoughts, let's take a quick trip down memory lane and look back at Upstart's journey so far. I mean, they've come a long way from their humble beginnings as a small startup.
It really has been an incredible ride. They've weathered their fair share of storms along the way, including, regulatory scrutiny, funding constraints, and those economic downturns.
Yeah, but they've always managed to adapt and innovate, emerging even stronger each time.
It's true. They've shown incredible resilience and just an unwavering commitment to their mission of making credit more accessible and affordable.
That's what really sets them apart from so many other companies in the fintech space. They're not just about making money, they're about making a real difference in the world.
They're using technology to solve real problems and improve people's lives. It's a story that resonates.
It really does.
Yeah.
Now let's wrap up this part of our deep dive into Upstart's earnings call with a few final thoughts. What are some of the key takeaways for investors and anyone who's just interested in the future of finance?
Well, first and foremost, Upstart is a shining example of how AI is reshaping the financial industry. They're proving that AI can be used to make credit decisions more accurately, more efficiently, and more fairly.
And they're challenging that traditional idea that high growth and profitability can't exist together. They're showing that it's possible to do both.
Right. And they're also showing that you can build a successful business while still making a positive impact on the world. They're making credit more accessible to people who've been underserved by the traditional financial system.
Upstart is definitely a company worth watching. They're pushing the boundaries of what's possible in finance.
And they're just getting started. I'm really excited to see what they accomplish in the coming years.
Yeah, it's been really fascinating to unpack Upstart's journey and their vision for the future of lending. They're definitely not afraid to, push the envelope and shake things up.
That's for sure. They're constantly innovating and challenging the status quo, which is exactly what we need in this industry. I mean, it's been ripe for disruption for years.
You hit the nail on the head. They're not content with just making those small improvements. They're aiming for a complete revolution in the way credit works.
And that's what makes them so interesting to follow. But even with all their innovation and ambition, there are always potential challenges and risks.
That's true for any company, especially in a field as complex and dynamic as finance. What are some of the hurdles they might face moving forward?
Well, one thing that comes to mind is regulatory scrutiny. The financial industry is heavily regulated, and as Upstart grows and expands, they'll have to navigate a pretty complicated web of rules and regulations.
That's just the reality for any company in this space. It's a constant balancing act between innovation and compliance.
Exactly. Another challenge they could face is increased competition. They're the front runner right now in AI-driven lending, but others are going to try and catch up.
As they say, imitation is the sincerest form of flattery.
You got it. And as the market for AI-driven lending gets more crowded, Upstart's going to have to keep innovating and finding ways to stay ahead of the pack.
But it seems like that's what they're good at. They've consistently pushed the boundaries and come up with really creative solutions.
They have, but it's something to watch for sure. Another potential risk is the economy. I mean, it's always changing.
Right. We've already seen how an economic downturn can really impact lending, even for companies with sophisticated risk models.
That's true. And while Upstart's model is built to be more resilient to those kinds of changes, there's always a chance of some unforeseen event that could really throw things off.
That's the nature of finance. Unpredictability is always lurking right around the corner.
And then you have the challenge of execution. As Upstart scales at this pace, they'll need to make sure their operations can keep up and maintain a strong company culture.
Scaling is tough for any company, but especially one that's growing as fast as Upstart.
Absolutely. They'll need to attract and retain top talent, maintain their advantage in technology, and make sure they're delivering a great customer experience every step of the way.
Those are all essential for long-term success.
Yeah.
But as we've been talking about, Upstart has a lot going for it. They've got strong leadership, a game-changing technology, and a huge market.
You're right. And let's not forget their willingness to take risks. They're not afraid to go against conventional thinking and do things their own way.
That's what makes them so interesting.
Yeah.
They're not just playing the game, they're rewriting the rules.
I couldn't agree more. Upstart's a company worth paying attention to, and I'm excited to see what they accomplish in the future.
Me too. Now, before we wrap up, I want to touch on Upstart's mission. They talk a lot about making credit more accessible and affordable. Do you think they're actually making a real difference?
That's a great question. And I think they are. They're making a positive impact in a few ways. First, they're giving access to credit to people who might not qualify for a loan from a traditional bank. This is so important for people with limited credit history or those who've been penalized unfairly by the old credit scoring models.
So they're leveling the playing field and giving more people a chance to build a better financial future.
Exactly. And second, they're helping to lower the cost of credit for borrowers. Their AI model lets them price loans more accurately, which often means lower interest rates.
That's a huge benefit for people, especially these days.
Absolutely. And third, they're bringing more transparency and fairness to the whole process. Their model uses objective data, not subjective opinions, which helps eliminate some of the bias we see with traditional lending.
It's really inspiring to see how they're using technology to build a more inclusive and equitable financial system.
I agree. Now, it's important to remember that Upstart is a for-profit company. They're here to make money.
Of course. But it's great to see a company balancing their financial goals with a genuine commitment to doing good.
They're showing that it's possible to do well by doing good.
And that's a message that resonates with people.
It really does. People want to support companies that share their values.
Well, I think we've covered just about everything there is to cover in this deep dive into Upstart's Q4 earnings call. What a ride.
It was a great conversation. I hope our listeners have a better understanding of Upstart and what they're all about.
As always, we encourage everyone to do their own research before making any investment decisions.
And be sure to tune in to future episodes of Talk Tickers, where we'll break down more earnings calls and keep you up to date on all the latest trends in finance.
Thanks for joining us today. Until next time, happy investing.